So much for that, Ruchit. But GST continues to be our big story that we are tracking. In fact, sources are telling CNBC-TV18 that cutting GST on insurance to 5% or nil would be a big setback. Yash is here with more details. Yash.
Well, it sounds funny when a sector says that cutting the insurance to a particular level would actually be negative, on the services which it provides, in this case, insurance. But there's a very important reason why the insurance industry believes that cutting GST to 5% or even bringing it down to nil could be a big negative for the insurance sector. And that is because the slab of 5% or nil does not provide any input tax credit, which is the biggest decider if prices of insurance come down or not and the demand increases or not for the insurance sector. I'll tell you exactly how that happens, but before that, I'll just address the news. What we've been given to understand is that the insurance industry is expected to reach out to the finance ministry with a proposal to not cut GST on insurance products to 5% or nil, rather stick to their original demand of bringing down GST from the current 18% to 12%, which will come with the advantage of input tax credit. We've spoken to many leaders in the insurance industry. We've worked out the numbers ourselves as well. 18% GST versus a 12% GST, a 12% GST with input tax credit does give the insurance industry some headroom to bring down premiums for policyholders and hence increase demand for insurance products. But the moment GST gets reduced to 5% or nil without input tax credit, then in fact it's a big deficit which the insurance industry faces on each policy, which of course would not let them reduce premiums, but has a very strong risk of increasing premiums significantly to sort of make up for the deficit which they will face on their own books. And why does input tax credit does not come with 5% or nil? That's because the GST Act does not have the provision itself of providing input tax credit on a GST rate of 5% or nil. And hence, indeed, if 5% or nil happens, then it could be a big negative for the life as well as the general insurance industry when it comes to the premiums as well as demand.
Okay, all right. Thank you so much, Yash, for joining us with those details. Important update there, because that disallowance of input tax credit would become a cost for the insurers, which they would ultimately pass to the consumers. So basically, there would be increase in premiums despite that cut that would come by. With that, we'll slip into a short break. Up next, we'll talk about all the other buzzing stocks which will be in focus.